Ladies and gentlemen, another video to cover one of the biggest questions and one of the biggest trending stocks right now in the stock market, especially in the artificial intelligence sector, and that is C3.AI. Now, reason we're talking about this is because the short interest has become increasingly very high, and this begs to ask the question, does C3.AI have the potential to experience a short squeeze like we saw with some of the other meme stocks back in 2021, 2020 with GameStop and AMC? Now, of course, with C3.AI, there are many things to consider, especially as it's emerging into this new type of artificial intelligence sector that we've really seen ChatGPT really gain a lot of light to this area. Now, talking about C3.AI, one thing is for sure, the short interest has really increased, and we've seen prices actually decrease down about another 3% on the day. However, is this just correction in the actual overhyped AI stock that everybody is saying it is, or could they be preparing to get in at a cheaper price, possibly a squeeze even, and taking advantage of everybody that's taking a short position because they do have a path to profitability that we want to cover? Now, of course, if you're new to the channel, thank you guys for watching. Hit the like button for the algorithm and subscribe for daily videos. And of course, I'm not a financial advisor, so take everything I say with a grain of salt. I'm just doing research and sharing the information with you, and make your own decision before making an investment decision. Now, if we pop it up on the screen here, let's get C3.AI, and like we talked about, closed at about $36 on the day. Now, currently down about 3%. Market cap is sitting at about that 4.24 billion. We do have possibly many investors that have been scared since Baker Hughes sold about 2.2 million shares, saying, hey, what do they know that the retail investors or the other institutional investors do not know yet? And with that, you do have C3.AI becoming one of the top stocks in the actual stock market, having the highest percentage of short interest. You see here Investor Place just placed out an article with the 7 AI stocks with the high short interest, and hey, look who's basically at the top of the list, C3.AI. If we look right here, looking specifically at the amount of shares that they do have currently shorted, you can see on shortsqueeze.com they have 34.95% of the shares are shorted, and that's the short percent of the float. The current shares in the float are at 93 million right here, with 32 million of those currently being shorted. That leads back to the question, why is C3.AI being so heavily shorted, and what could this mean for the future of the stock? Now, one thing, of course, to mention is that C3.AI has really exploded this year. If we pull back on Webull, you can see here just on the day chart, back in January, C3.AI was only trading at $10.66, getting pop-ups here to nearly $50. Now, with that being said, C3.AI has grown 254.8% so far in just this year alone. And the debate is whether is this massive overhype or this AI bubble that many people are predicting, is this FOMO, or is this people just betting in before these stocks really begin to grow? That's the big question, and is the true experience of the bulls versus the bears. Now, talking about C3.AI, one thing that is scaring investors, and possibly why a lot of these shares are starting to be short, like I said, is with Baker Hughes. If we go to the news section right here, with C3.AI, we do have them that Baker Hughes basically sold 2.2 million shares in the second quarter, and this sale represents basically 1/3 of its stake in C3.AI. What you're also seeing with this type of information is with their C3.AI disappointing earnings outlook, pointing to the latter rather than the formal. And if we go to that article, basically what that brings us to is they only had a 5.6% increase in revenue in the fiscal year 2023 to 266 million. And this is slowing from the previous revenue report of a 38% growth. So you see a little bit of a decrease here, and especially C3 says that it expects an adjusted operating income loss in the range of 50 million to 75 million in 2024. So it's not profitable right now. But one thing that's really keeping investors at the edge of their seat is that they do have their earnings that will be coming up here in the near future, and that is on August 30th. If this does beat their expectations, which right now is at negative 0.17% for earnings per share, if this is beat like it was beat in last quarter earnings, we could see a large influx into C3.AI and possibly having to have all of these shorts cover their losses. With that being said, you do have some green flags that are happening for C3.AI right now. Just because we are seeing a correction does not mean the company is trying to make positive changes for the future. One thing is that its growth is accelerating, and they're doing this by changing their business model. What they're doing is switching from a subscription-based model to a consumption-based model. What this means in simplicity is that there's not these clients that are wanting to use their applications. They don't have to pay just one flat rate or one subscription rate, say $100 a month. A consumption-based model means that these companies are paying per usage, or basically paying for per hour usage, or whatever the unit is. It's kind of like electricity in your house. The more you use it, the more you're going to get charged. With that being said, you can have many new companies that helps diversify their client base by allowing smaller companies to get in and test their applications without having to pay that high subscription model. And of course, with the companies and the clients that do utilize them a lot, just increases the revenue for C3.AI. And with that being said, the company is expected to become profitable on a non-adjusted basis in fiscal year of 2025 right here. And these are the expectations that they do expect here within the next fiscal or 2 fiscal years. So many things are to be considered when talking about C3.AI. Yes, the stock really has exploded in terms of price. We've seen this with over 250%. But right now, with a little bit of a correction, what we're seeing right now, and with the increase of the short percent of the floats, as we're seeing, right, 32 million shares that are currently shorted at 35%, could there be possibly an opportunity for a short squeeze? And what we see here, Investor Place even says possibly an epic short squeeze in theory is possible. However, it's a high risk, but that does come with high reward. So it's important to consider your risk management. And like I said, I'm not a financial investor. This is all for entertainment. Let me know, what do you guys think down in the comments about C3.AI? Do you think they do have a bullish future, or do you think right now this is just in an AI bubble of frenzy, kind of like the .com bubble that people were using, trying to get in and ride that rally, trying to make quick profits before everything comes crashing down back to more of a reasonable price target? Those are lots of questions to answer, especially with C3.AI trying to compete with some of the top high blue chip stocks that are heavily involved in the artificial intelligence software and into the AI design, such as Google, Microsoft, Amazon, all having pieces of the pie within the AI industry. It can be hard to compete against. However, if they do stand out and offer a great product at a competitive price, C3.AI could possibly continue to hold its #1 spot with that ticker symbol AI as a top trending stock. Lots of questions. Let me know what you guys think in the comments. Peace out, take care, and I'll catch you guys later.